Is the stock market getting too overvalued? What one expert says about it in this week's Fastest 4 Minutes in Finance. Hello, I'm Scott Inman. Well, Brian Wesbury is the chief economist for First Trust Advisors, an investment company that we utilize, among others, for our clients' portfolios. And he's been warning that the stock market is overvalued for the past 2 years. In a recent article, he explains why. He uses a model to determine the fair value of the S&P 500 index. In the simplest terms, the model looks at stock data like the price-to-earnings ratio for the index, but it also factors in the 10-year Treasury yield. So the higher the yield, the less stocks are worth, according to Wesbury. And using a 4.25% Treasury yield, Wesbury says the market is overvalued by roughly 40%. Now, before you spit out your drink over that, he does not believe the market will actually drop 40%. It's just a model. But he does believe the S&P 500 index is out over its skis and a correction is coming. First Trust has an end-of-year target for the index of 5,200. That would still be about a 19% drop from where we are at the time of this recording. And that's a deep drop that could rattle investors. But Wesbury offers some optimism, believe it or not, about the future of the stock market. First, it's likely that the Federal Reserve will cut interest rates, which will bring down Treasury yields. And if the data continues to show a slowing economy, and if there is a stock market correction, the Fed may cut rates even more. And Wesbury says a 2.85% 10-year yield would put the market at a fair value. And second, he compares 2025 with the dot-com boom and bust of the 1990s and says the market was actually right in the 90s. It was just early. He writes, quote, "Cell phones, fiber optics, internet connections, and faster computers with better operating systems would boost productivity and profits. It was just early. Is AI the magic technology that provides immediate and permanent returns? So far, the jury is still out." And finally, Wesbury points out that the top 10 tech stocks that receive all of the AI buzz represent almost 40% of the S&P 500 index. So there are plenty of sectors in the index that still look attractive. Bottom line, the index is up nearly 10% year-to-date following 2 years of massive positive returns. It is wise to expect volatility in the coming months, but it is also wise to stick to a plan of staying invested in stocks for long-term growth while considering portfolio adjustments for the short term with the help of your financial advisor. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.